Welcome back, everybody, as we're looking at long-term trends. Now, before we start the weekly recap this week, let me just point out the name change here, not fractal trading anymore, but now theTrendtradr.com, where you can find me now. Pay attention, there's no E there in the trader, the last E is missing. Just a simple name change to kind of show a little bit better what I'm really talking about, which is trend trading, so it's now the Trend Trader. Switching to new developments, we haven't been looking at charts for 2 weeks or something like that, and that has the reason that the market always needs time and it also needs space to move. So it doesn't really make sense to just look at the price action week by week. Better to wait for a longer kind of term or more bars to show you the development that is really going on in the last couple of weeks. We do not have too many trend changes right now, as we're trading the long term and we're taking breakouts out of side moves, corrections that had been going on for months most of the time. The trends also take a lot of time to develop before you really get your exit signal. And you gotta just wait for that, and that's actually the part that is so hard for many people to do, and that's why they don't do long term and they don't do trend following, which I don't really understand. I think that once you get the psychology straight, and of course you really have to work on that, but if you can accept it and just practice and do it in the market, then you can really see how powerful that concept is, that you cut the losers, the stuff that doesn't get going, you just get rid of it right away. You don't lose a lot of money because you have some risk management going. You can also check out a video that I did on risk management in the Trading Essentials playlist. And on the other side, you let the winners run. And that's exactly what we're doing here. And I think the indice trends, except for the DAX, will show you that all of these trends are still running. Now, the DAX is not running anymore, but it was successful as well. Now, looking at the S&P, these two breakout lines that I draw here had been back in December 2016, at least the first one here, and the other one here January 2017. And ever since that, in every weekly recap that you watch here, and when we look at the S&P, these breakouts are still working, and the price is now at 2,472. The first entry occurred at 2,200 just about, and there was an add-on possibility at 2,282. Trend is still running. We have our moving averages that are wide open, and we do see the price continue up. Of course, momentum has been lacking for the past 6 months or something like that. Doesn't really matter, as the price is the leading indicator, and as trends are so extensive, of course the momentum is not going to keep on making new highs. It's just that the trend is extended quite a bit here. You do have divergences coming up. The first one was here. You have another one coming up, and it's likely that you'll see this continue as there's so much strength in this stable trend moving up. Of course, we never know how long it goes on this trend. It can also end any day with a hefty move to the downside. But for now, momentum up, price up, moving averages exactly how they're supposed to be, wide open and just moving along below the price. And there is nothing really to say more about it except for hold on to your long positions, and there's no second guessing or anything. Just hold on to the position. We don't know how long the trend will run. Nobody knows how long it will run, especially when you have trends that move into territory where they had never been before, meaning all-time highs. There is nobody who can ever tell you where the next resistance is going to come up. So therefore, you just hold on and let it run, no matter when it's gonna end. And as you can see, momentum, as we talked about, is still quite up there. You do have a chance for this to go on a little bit more. The Dow, even more crazy, as the momentum could be picking up some speed here with price action like this, and the moving averages, the balance zone, can't keep up with the price movements of the last 2 weeks. So this is very bullish. Again, also breakout mark down here in December, and ever since then it had been running. Nikkei 2, same kind of thing, even though this is really slow, really boring. First breakouts down here, we were holding on to the longs right through these couple of weeks that went down into the balance zone as there was no fractal to stop us out. Price went up again, and it had been or has been absolutely dead in the last 2 months. So who knows where this is going to go. For now, the situation is a bounce off of the balance zone in the new trend direction, which goes upwards. And now you have a simple correction. It's not a deep correction coming back down into the balance zone, but you have a slow but longer kind of side move. We don't know, we don't interpret this kind of stuff. When we get the fractal inside the balance zone, we'll put our stop there, and if we get stopped out, then that's it. For now, no fractal inside the balance zone and slow price movements. Let's see if this new breakout level here, right at the 20,300 mark, can be taken in the coming weeks to see this move higher, so to speak. Now, there is the German DAX index as well, which I already mentioned in the intro. You do have breakouts down here, trend moving, and then a couple of weeks ago you get your fractal at this level, and it had been broken, so you're actually out of this trend and you have to wait for a new entry, which for now would be up here, to wait for new price action to the upside. As you can see, we are stopping in the DAX at the monthly high here, the previous all-time high. We're stopping here even though we exceeded it. We are waiting for a correction and then probably a continuation of the up move if there can be some momentum again in this kind of market. As you can see down here, momentum hasn't been as high as here, so we're kind of running in the danger of a divergence on the monthly. However, before that plays out, you do see prices moving higher usually, and also making divergences on the smaller time frames. So I doubt that the action is over in the DAX already when it comes to buying this. Now let's move over to the Forex world, Euro US dollar. Just a reminder here of what we said a couple of weeks ago. We were talking about the breakout down here. It was a very early breakout since the monthly chart, the overall time frame, is not trending yet. So we're not really trading in an overall situation where we are in a trending environment in the euro dollar when we take long positions, but we are just in the process of getting there. And this is a very early long that we took, but it worked out pretty well. As you can see, I marked the heavy resistance area that we have here, and we were able to zoom right above it to almost 120. But now we have this divergent bar here where we see bears taking over or buyers just selling their stuff, and the market doesn't really look too bullish here for the end of this week. However, we are still in this trend up. We are high above the balance zone, but because the monthly chart isn't trending up, what we really see here is it just made it through the balance zone. It just made it through all of these resistance levels here, which are indicated by the red line, the blue moving average as well, and of course the order block that you will find in here. The price also made a new low at this level. It was lower here than it was here, but price, after making this low, zooms right through all of these resistance points, and that usually is a good sign for the overall movement that could follow all of this, which is a trend to the upside. We don't know how far it goes, but that could be a trend that builds momentum. However, before it can really take off, what you need is, after this new low has been made, you need the price to get to these resistance points, correct, give you a breakout fractal, and then go long. And over here we just in a move that it carries a lot of momentum, and we're already seemingly moving to the upside, but I don't believe that. Price might become weaker here in the coming weeks as this trades on. So you want to make sure that you have a little bit more of a tight stop. This is not a situation where you add on, and this is not a situation where you wait for the trend stop to be hit. You want to get out earlier. This is true for the euro dollar because of the monthly chart. Euro yen shows us a different picture. The monthly chart, after making the low, already did come up and stop at one of these resistance levels here at the red line almost. Correct, doesn't make a new low, and then it's breaking out on the monthly. So this for me is much more bullish here than the euro dollar at the end of the last week. Even though price action might not confirm that right now, it's not like we get a 500 pip candle in the euro yen. Still, that's the approach, and that's how we trade, and also how we size the position. And of course, where we get out. We just have to have a little bit more of patience here. As the euro dollar comes down, the euro yen might also retrace, but that doesn't mean it's going to fail completely, and for a long time it might move higher than and kind of split off from what the euro dollar is doing. Euro Swiss franc is the same as euro yen. When you take a look at it, nothing happened here for a long time after the SNB didn't bind their currency to the euro anymore, and now we have a breakout out of here. I believe that this is still bullish enough, not anything to worry about here, as we are breaking out on the higher time frame and also on our trading time frame. But remember, these kind of candles, they're pretty cool when they happen, but what they mean is really that when the price moves up such a big way, it will also have to come down again to correct it in a way like that. So you get a lot of volatility, and volatility is good for long price movements and for quite some stable and strong trends, but it's not that great to live with as the position develops, because it's just coming back so much a lot of the time. Taking a look at British pound dollar, we were long. I was long British pound dollar, but I exited the position. And if you haven't exited it, you can also put a stop below last week's candle, as this trend probably doesn't get going. Now, what happens when you take such an early entry, and we will see on the monthly soon why it's such an early entry. What There is a possibility for the price to really move high very rapidly and then give you a divergent bar or a hammer or whatever you want to call it, and then you exit and you have a small profit, as you only risked very little of your money in here. But when you did see the price not even going after 3 weeks or 4 weeks almost being in this trend, or this breakout, not trend, this breakout, you just want to minimize the loss and just get out. So I lost like 0.005% or something on this. So it's really ridiculous how small the loss is if you manage the position in an environment like this, which is a downtrend on the monthly, and now a little bit of a more bullish movement on the monthly, but you do have your moving averages, and they are the balance from where the price always wants to be, as there's no incoming news, and these lines always act as support and resistance, of course. It's very likely that when you see the price failing on your lower time frame, like we just saw on the weekly here, that you are hitting one of those lines on the monthly, and you want to take it serious, and you want to not play a dream scenario where you think the trend is just going to move through the resistance and not correct and not be a little bit more choppy in there. We want to wait for it to come out, make a fractal, and then really break out. And when the price is moving higher, should it ever be doing that, just an example here, you want to add on and you want to play the trend. But this is not a trending situation to the upside. That's very important here to understand. The opposite, of course, is true in British pound Australian, which had us short already all throughout this. We exited this in April or something, and now we saw that correction, and we are breaking out again to the overall, or into the overall trend direction, which is a fractal breakout to the downside that was taken 3 weeks ago, as I mentioned already, and we are holding shorts now. Not a lot of momentum in here. But as you can see, the monthly chart, our overall time frame, it trended down, it corrected just to the green, to the shorter term moving average, and now it could possibly continue down and finally reach this target that we had at 140, 145 months ago. It's just that this pair did not allow us to stay in all of the movement. Should it come down to 145, that would be a 2000 pip move to the downside. It didn't allow us to stay in that trend because there was such a big correction here going on. We take profits at that point and then re-enter the market. US dollar Canadian, also a situation where I told you that we're not in a trend, but what we are doing is we're trading a correction. And what we do is, you see the price in an uptrend, it corrects down here. Failing at the moving averages, usually the price continues the trend. If it breaks out like it did here, breaking out above here, and it fails, you want to take it short because you have an opportunity for a momentum move to the downside somewhere towards the blue line. Now it can exceed the blue line, it might not hit it, depends. Nobody knows in advance. So what happens here on our trading time frame is that we're breaking out on the weekly here, but we fail. We make a fractal here in the balance zone, which is taken, and the price is weaker or becomes weaker and weaker. And that's what we traded to the downside, as I mentioned in the weekly recap back then. We took the short up here, and now we are hitting here the previous stop or the low, not the stop, the low of the previous correction that the market did, or the previous leg of this whole correction that has been going on. And of course, this is right in the previous fractal area over here. So we have tight stops on here. It depends where you want to keep it. You can exit as the price closes above the green line. You can put a stop 2 candles back. You can put it 3 candles back. Really depends. All I want to say is that the overall time frame is not in a trending environment. We are in a correction. So don't let this run forever, because you have no chance of a trend developing in such a environment. For the last two pairs today, New Zealand dollar, Australian dollar, we have a huge downtrend going on, a correction coming up here, and the price never managed to break out of this correction in the old trend direction. Instead, you have higher prices now above this resistance area. Now we seem to be breathing in here a little bit, but we're holding longs in the New Zealand US dollar, because as you can see here on the monthly chart, we're breaking out as well. And there even seems to be a lot of momentum in here when you look at how the price is moving, closing high, moving higher, and breaking out. Now, of course, after 3 months of moving quite out from below the balance zone to the upside, quite a bit away from it as well, you will see a correction, that's for sure. We took the breakout since we never know when the market, or how, not when, but how the market is going to perform and really move out. Of course, probability is higher that you do sit in this long for a while, for a couple of weeks, without it making any money, because the price needs to correct this up move, and then hopefully we'll see a continuation to the upside. Australian dollar, exactly the same thing. We saw a breakout above this fractal, which is the upper border of the entire correction, and now we're trading above it. We're breathing a little bit, and nobody knows if this is going to come back down. Then we'll simply exit, or if this will be continued to the upside. And that's what we're in for. We have appropriate risk management on, and we follow the new breakout signals in all of the markets that we discussed today, as they are coming out of corrections that take as long as we see here in the Australian US dollar. I mean, look at this. We are looking at April 2016, more than a year ago. The market has been doing nothing. It was just trading on top of itself here. As you can see in the moving averages, they are intertwining, price not successfully breaking out anywhere, but now we do have this breakout, and we are following it wherever the market wants to go. Thanks a lot for watching. Post a comment, like the video, and I'll see you soon.